to QCware. This is really, I think, the flagship kind of standard-setting conference in the industry, and I haven't made it to 6, but I think that this is my 5th, and really grateful to be here. BCG my name is Matt Langione. As Yanni mentioned, I'm a partner at BCG, and I lead our quantum computing topic. It's a topic that BCG takes a real keen interest in, and some of that interest is visible. So we have, I think, 10 reports out at this point, and we'll continue to keep trying to stay at the forefront of kind of thought leadership. But some of it's a little bit less visible. We have hundreds of consultants and data scientists that are now trained up on quantum computing. We also we serve 4 verticals. So we have tech providers, we've got end users, investors, governments, and our work continues to increase at a doubling each year. I want to talk about 3 things today. The first is the market for quantum computing, and this is effectively a new angle on a market sizing that some of you will have seen. I'd also like to talk about enterprise activity in quantum computing. So if the market size is prospective, enterprise activity is a little bit more around how are businesses investing today in quantum computing. And then the third is really kind of a bit of a call for action and a set of recommendations for those who are not currently investing, and why it's critical to start now. So let's start with the market. It's a remarkable fact that kind of all of us are gathered here today effectively thanks to kind of one mathematical function, and this is sparse matrix math. And this is a quantum advantage function. Now, it's just one function, but it is a critical component in 4 computational problem types: simulation, optimization, machine learning, cryptography, that open up onto hundreds of really high-value industry use cases, whether it's drug discovery and simulation, whether it's portfolio optimization or anti-money laundering. These are important use cases for business, for society, and we think that when added up, the value creation for end users will be in excess of $500 million. So we have $450 to $850 billion. Now, to give a little bit of a detail on how we kind of get there, of course, this is a deep kind of bottom-up sizing. We've talked to hundreds, at least 200 experts in the various industry verticals, and of course, technology experts as well. But one thing that I think is often kind of misunderstood about the sizing is the fact that we express it in terms of value creation. Value creation we take as all of the value that accrues to an end user of the technology, which is comprehensive of revenue uplift, that's in green, and cost reduction. And let me just maybe tease out a little bit the difference between the two. So from a revenue uplift perspective, these are things like new products. So let's take an industrials company, and let's say that they use a quantum computer to, through simulation, to help develop a unit cell for an EV battery. And this is a new product for them. That would, of course, go into revenue uplift. But suppose the same company also develops, say, surfactants. It's an existing product. They discover surfactants, or they produce surfactants for oil well extraction, and they use a quantum computer, again simulation, but this time to just find a more efficient synthetic route, right, for manufacturing. So they could take out cost from the supply chain. Maybe they can take out labor cost. That would go in the red here, right? That's a cost reduction on an existing product. When you sum these, again, we think that in equal measure they contribute to the sort of 450 to 850 billion. But it's worth noting that, I think what we have in mind is typically what's in green here, which is to say new products and innovation through quantum computing. And of course, that's extremely exciting. But I think we'd be remiss if we neglected the real value that'll come from efficiency as well. Okay, and when you normalize them on net income, that's how you get to the $450 to $850 billion. But really, it should be noted that we think that $2 trillion, $3.5 trillion of revenue uplift is possible with quantum computing. But that is an end state. It's the future. It's tomorrow. What about today? How are companies investing to build capabilities right now? The way that we built out our view of this was our traditional research, but also an end user survey that just closed last month and would just with real excitement can show some of those results here today. The net of it is that the last 2 years have been banner years for enterprise activity in quantum computing with 100 or more proof of concepts, I think for the first time in the market this year in 2022, which is an increase of 3x since 2020. So just in 2 years, it's tripled. And a lot of that growth you can see is driven by, pharma had around 6 POCs in 2020. Far be it for me to speculate why it's grown by a factor of 3 over that period, but of course there are successful AI clinical candidates now, AlphaFold, things like that. The big industries on the right are not surprising. It's healthcare, it's materials, it's logistics, it's finance, and we believe that around $300 million has been spent on POCs in industry. Just this year in 2022. Now that doesn't include academia and other sources as well. So it may be a bit different than the market sizing that you'll see a little bit later. But we think that's a really important kind of bellwether. Now, about half of those that have quantum POCs today are spending less than $1 million, and about half are spending more, with around 10%. So there are 10 or more folks that are really a little bit at the vanguard from the perspective of a program build, so $10 million of spend or more. And it's not on the page, but the way that this breaks out is that around half of that is typically internal spend, so think about spending on FTEs to actually operate the program, and about half of it is vended spend, so working with your hardware provider, et cetera. As you can observe, I'm going to talk a little bit in a moment about why the $1 million mark is meaningful. But before I do, it's worth noting that there's significant variance by industry. So you'd seen that there were quite a lot of use cases, for example, in pharma, but the vast majority of those are spending less than $1 million. A lot of them are more recent investments that are made in quantum computing, whereas finance had maybe a bit less in terms of the overall number, but almost all of the programs in finance are done with a good deal of seriousness. Okay. Now, why does the $1 million mark matter? It matters because it is a kind of benchmark of the seriousness and the kind of executive attention that you have on your quantum program. It's a signal that you have landed the business case. You'll note that if you spend less than $1 million, you're 3 times less likely to have a cadence with the C-suite, right? If you spend more than $1 million, you're twice as likely to be building internal capabilities in addition to just partnering. You're twice as likely to have a dedicated IP strategy. And the way that you're likely to spend, if you spend more than $1 million, is on real capability building things like hardware spend or algorithm development. And so the $1 million annual spend benchmark matters, and it's something that we're going to track going forward. When you put all of the companies that are spending right now on quantum computing on a map, on a matrix here, some interesting observations start to emerge. But before I go into those, let me just say that you have here on the x-axis the spend levels today, so less than $1 million, 1 to 5 million, and 5 million plus. And then on the y-axis, you have intent to spend, right? And there are folks that plan to increase, folks that plan to maintain, and some that plan to decrease. But I think my first observation is that almost nobody investing in quantum computing today has an intention to decrease spend. There's a few, but it's very, very rare to have buyer's remorse. And that's especially true, it seems, for those that are investing seriously. So on the far right of the page, 80% or more of the early adopters, the kind of major early adopters spending 5 million or more, plan to increase spend, actually, in the period before quantum advantage, which is sort of the nature of the question here. And there are further interesting things, and there's a million ways that we can and probably will cut the data, but it's also worth noting that from just an industry perspective, that's effectively the color of the dots, you can see that just to take finance, there's a lot of activity in kind of the middle and the right column. For pharma, it's a bit split. And even on the leftmost column, right, that's to say those that are spending less than $1 million, there's a little bit of a split between those who plan to increase spend, right? Because one archetype or profile is that you're spending less than $1 million now, you just started your quantum program, and that there's a plan to kind of ramp up and move to the right. But there are also a significant number of folks that are in maintain mode. Maintain mode isn't necessarily bad, it's not decreased, but it seems as though there's still work to be done to kind of build the business case and develop the capability before moving forward. This is one probably view that we'll look to continue to build when we think about kind of mapping the quantum computing market. Okay, now there may be a split read around for pharma companies on the kind of less than $1 million, but there's really unambiguous support for the idea that it's important to build a quantum capability kind of before the end state. I think we maybe had one or two respondents that were of the other opinion. Most believe that you need to build a quantum computing capability right now. And there were 3 reasons that stood out. The first is just, of course, the time it takes to build capabilities. It's no small undertaking to think about the classical and the quantum resources, the talent needs, et cetera. It's also important to note that most respondents believe that you can develop important IP in the period before quantum advantage, and that's a big reason that they are investing now. And then the third is just that quantum computing is strategically important for their long-term growth. Now, this was a long list of potential options, so I want to mention a couple more that are here at the bottom of this list, but that are relatively near the top of the overall list. And there are things that I'll expand on in just a moment, but want to note here that users are seeing these trends too. The first is the belief that the value proposition from quantum computing providers is perhaps as good as it will ever be right now. And we'll talk a little bit more about the investments that quantum computing tech providers are making right now, and how those are things sort of to cherish and not take for granted. The second point is just that resources and talent will be limited, right? And so it's important to kind of snap it up while it's still there. And now I'd be remiss if I didn't just mention this, the last point here before turning to kind of the section on why it's important to build a quantum capability now. It's just that business case, making that business case to leadership is still considered the top challenge for companies trying to kind of build and extend their quantum computing capabilities. Not only is it the thing that is most challenging, as you see on the left, but also when we asked folks what they thought that the mistakes that they're making now when they look back will be, the number one that came in was an insufficient focus on really scoping, identifying, and developing true business applications that are meaningful to execs at their companies. Obviously, other points came up around talent and and the integration of classical and quantum as well. But I wanted to note that the business case, we're at Q2B, the business case, making that case to leadership really rose to the top. Okay, so I want to kind of conclude, and then we can open for some questions on why users should start really building a capability now if you haven't already. If you have, why you should deepen the seriousness of that capability, why it should include a talent strategy, an IP strategy, and a partner strategy. The reason is that we believe that a disproportionate share of the value created by quantum technologies will go to early adopters. This is especially true in industries where competitive advantage is defined by IP. There are a number of reasons for this, but we believe that around 90% of the value could go to these early users. The first reason is that talent is an extraordinarily scarce resource. Forget trying to onboard that talent yourself now. It's even becoming more and more difficult to partner to get top talent, right? It's just an extraordinarily difficult thing. So getting information innovators to work on your problems is something that's extraordinarily challenging. The second point is around compute resources being potentially extremely limited in the period of early quantum advantage. We've talked to some companies that tell us that, to the extent that we get a quantum advantage machine in the next, say, 3 years, it may be another 2 years before we get our second one. And in that window, you could create an enormous differentiation from an IP perspective to the extent that you're partnering closely with that provider. The third is just, of course, the point that quantum solutions, they are custom, they'll take time to build. And so if you don't get in now, it could be the case that you're on the wrong side of the curve and find yourself unable to catch up. Okay, so the real net point here is that quantum computing talent and resources is probably as inexpensive and as favorable to end users as it may ever be. We're here now in the R&D phase effectively, where the pricing power that providers have is somewhat limited by machine performance. So in this environment, providers are willing to invest, not only to keep costs down, but also to partner with, to upskill users. The IP sharing terms are favorable, right? But all of this will change in the period of breakthrough advantage, where costs will rise in part because supply is limited, but the massive pricing power and the control over this scarce resource could even encourage providers to weigh the benefits of verticalizing. So selling, say, for example, a compound vis-a-vis compute, right, from a drug discovery perspective. Over time, of course, it will reach a competitive equilibrium. And, in the long run, almost all markets tend to have kind of like three top competitors, with the third competitor about a fourth the size of the first. And, all of the kind of standard pricing and business model dynamics will start to set in. But in the period before that, we think that it's really, really critical to get in with a provider in order to avoid being on the wrong side of this curve, and for it to be too late by the time the market matures. So I want to talk just a little bit about some terms, and there are terms that I like and use, but they may be a little bit insufficient to describe the period that we're in. We spend a lot of time talking about things like quantum supremacy and quantum advantage, which are important theoretically, but they're out of tune and don't necessarily reflect the way that enterprises buy IT. Right? Enterprises rarely ask questions that are theoretical in nature about best possible alternatives. They ask a very simple question, and it's, does it work better than what I have in my workflow today? Of course, they ask questions about costs and things like that. But I think that we are on the precipice of entering an important milestone in quantum computing, where we are landing POCs with clients that are using real data, not synthetic data, that are in live workflows. That doesn't mean real time, but live workflows versus production environments. And that companies are saying, for the first time, that we want to have a solution delivered through a quantum computer, not for some sort of representative need, not for PR, but because we think that it's going to add as much or more value and have a roadmap to much more value in the future. And that, to me, seems an important milestone. We call it enterprise-grade quantum computing. And it's an important milestone both technically, but also because the only body that can truly validate the business value of quantum computing are buyers, right? And we think that we're entering the period where the buyers are going to start to speak. So let me just recap a few key findings here. The first is that end user experimentation is really taking off. We've got 100 active POCs. We think that $1 million annual spend should be a desideratum for those trying to take this seriously. It doesn't need to start there, but we do think that once you reach that threshold, you're more likely to be kind of building toward meaningful competitive advantage through quantum computing. We found that almost no one is experiencing buyer's remorse, especially those that are spending with seriousness. We do think that a real disproportionate share of the value will go to early adopters. We think that it could be a winners takes most dynamic. And so therefore, the time really is to partner now. And I think that that's a feeling that was shared among the folks that we surveyed. It's certainly the thing that we're advising our clients to do. So let me stop there. Thank you, QCware. I don't know if we have time for questions, but certainly if not, we'll be around. We've got a nice contingent here from BCG. Please stop by and ask us any questions that you have. Thank you.